What's up, YouTube? Nvidia just reported their Q2 earnings, and that's what this video will be about. In the aftermarket, post-market, Nvidia is trading right around $500 a share. Um, in their Q2 earnings, they announced revenue of $13.5 billion. Estimates was $11 billion. They also gave forward guidance saying they're expecting $16 billion for their next quarter. The so they announced last quarter saying they expected $11 billion this quarter, but they produced $13.5 billion. So I think it's pretty safe to maybe assume that next quarter it's probably going to be 18, maybe $19 billion in revenue. But we'll wait and see what they got. They also are planning on doing a share buyback of 25, right here, $25 billion share buyback. Um, so obviously that's a lot of money for share buyback, especially when the stock is trading at all-time highs, which really has to make you think, okay, that do they really think that their company is that undervalued, that cheap right now, that they're going to put $25 billion into buying back this stock? So it makes you wonder if they're not expecting a potential pullback. And when the stock pulls back, then they start picking up these shares because they can buy these shares whenever. They just issued a 25,000 or $25 billion buyback that they can use whenever they want. They can buy back whenever they see fit. In the last quarter, which you'll see here soon, they bought back, I believe it was like $2 billion worth of shares. So let's take a look over here. There's your record revenue, $13.5 billion. We just looked at that. We'll hop over here to the earnings report that they gave us. Actually, the press release is what we're looking at here. We'll slide up here. So there's your diluted your earnings per share, $2.70 a share. Analyst estimates was $2.09 per share. So I wrote down everything down here. We have a EPS of an estimate of 209 for this quarter. It came in actually at $2.50. This is non-GAAP. So with GAAP, it's $2.50 per share for a 41% beat, which is a 17% beat, which it now makes it uh, our full year earnings per share of $8.59. Then we obviously need to factor in for next quarter, which brings us to a rounded $2.88 um, for next quarter, which is 49 cents higher than what the estimate was originally, which gives us a full year EPS of $9.08. Then that would, if we bring that down here, currently the stock is actually trading at 500, not 510, but when I was making this, it was at 510. We take 510 divided by 908 divided by 16% revenue growth. It gives us a peg today at 3.24 trading peg. Now, going back to the revenues here real quick, we did see that the so we know that revenues came in at 13.5, which is a 19% beat. So then if we just assume that $16 billion is what they're going to come in at, which probably going to be higher because they always lowball what they actually are going to produce. But we take those two numbers, that's a 16% growth between 13.5 to $16 billion. And also, if you take a look, which we can come over here to the analyst expectations, when they're saying they're going to make $16 billion next quarter, that puts them 5 months out, or sorry, 5 quarters out. And what's to say they don't do $18 billion? That puts them like almost 8 quarters out ahead of what analysts are expecting their revenues to be at. I mean, I don't know where analysts are currently expecting this, but if you look here, it looks like they're pricing out because the number of analysts are at 25 right here. Maybe this is only priced out by 2 years, 24 months. Maybe they're pricing this stock out 12 months, 15 months. We don't know, but I'm pretty sure they're not pricing this company out potentially to 2025, like the end of 2025 fiscal year. Like, so this currently is probably trading undervalued based on just the forward guidance outlook. I mean, this company is doing 100% year over year revenue growth. Like it's nuts. Like there's almost no way of truly valuing this company right now. If we come back to the this little sheet here that I made, we have a forward peg, or sorry, a peg today of 3.25. Actually, it's kind of a couple months out, really. But if we have a forward peg of the next year's outlook of 16.8 earnings per share with 16% revenue growth, our forward peg is trading at about a 1.8 peg, roughly, which anything two and below is pretty good, especially on a growth company. If you can get under a two peg, that's pretty good. So right now, it's valued a little bit forward looking at 3.2 peg, but that still gives us that's still pretty decent for a growth company, something like Nvidia right now. Nvidia is obviously growing like crazy. Um, Also, the forward PE on this company is 30, and the current PE, if we take 510 divided by 908, gives us a 56 PE. So today it's 56 PE, but forward looking, it's a 30 PE. So I mean, forward looking currently is telling us this company is not that overvalued. It's overvalued today, but based in 12 months, it's not. Based on those two, numbers, which is only a small section of data, but there's not much. When a company grows like this, it's so difficult to value, to try and, because there's no previous data. You're just looking, okay, what's the forward data? And it's hard to value something that's so forward looking because there's so many unknowns. You don't know. I mean, I don't know if this revenue growth is going to be 16%. It might be 30%. So we don't know the forward earnings per share. We're just kind of saying, okay, it seems like it could be 16.8% or 16.8 EPS, and we'll find out. But but let's keep moving on. Bring down from their revenue down to net income is 45% of their income is they get to keep. That's their net income. They get to keep that 45% of what they make. And gross profit is like 70%. Like, so your cost of revenue is only 30% of of your revenues. Just nuts. And two, if you look at their operating expenses, last year 2.4. This year 2.6 billion dollars. Last year they've doubled their revenues and their operating expenses only went up 200 and what, $50 million. I mean, this company's nuts. And got $16 billion of cash just sitting on the balance sheet. You got $21 billion of debt, but when you come down here to see what their free cash flow is, they can cover their debt with their free cash flow, which is partly why they're like, okay, do we pay off our debt or do we just buy back our stocks? If you come down here, you can see they paid back some debt, $672 million in debt, but they also bought $1.25 billion worth of their shares. So it's kind of wondered, okay, they obviously, you see that they bought back their share, but what price? Because the range where they bought their price would have been $375 to $480 in that range. So I mean, it's $100 range, but that they're buying back their stock in that range somewhere, probably maybe in the $400 range, but I mean, we don't know. I'm sure I'm sure they'll tell us somewhere, um, probably in their 10Q where they're buying their repurchasing stock at, but I don't think that's out yet. And that's it for their balance sheet here. Just phenomenal, and it's just going to keep getting better by the looks of it. But I mean, if you just take a look at that free cash flow, though, I mean, $23 billion of free cash flow, and not just this is in 3 months. So in 1 year, they're doing almost $100 billion, and they just $100 billion they get to keep. That is just nuts, just unbelievable. I don't know. Let's look at come over to the stock chart. I mean, honestly, there's not much to see here. This is trading right now at about 500 bucks a share, which is right here. Now, if this trend line is valid, even if Nvidia wants to trade on technicals, which it's not, it hasn't for the last, I don't know, year and a half now. If it does, we could see this, get up to 510. It might push through like this did. It might hit like maybe 520, which I that was my number. I had made a video on this actually yesterday saying 520 is where I would expect Nvidia to potentially reach. And after these earnings, I mean, I'd be just throwing darts at a dartboard at this point. I mean, you could probably easily think 550, $600 per share based on their forecast of where this company, what the CEO, what their forecast is of this company. It's nuts. It's just, oh, it's super cool, super crazy. Anyway, but that's I think that's my take on Nvidia. It's nuts. It's crazy. I mean, I think this thing's got another $100 left in it before we start to see uh, a break. I think there's gonna be so many people wanting to pile into this stock tomorrow morning. I mean, it's just gonna push this market higher. I think this is what's gonna potentially push us to new highs in the market overall. If we look at the Qs are up $3 in the PM. I mean, we're trading right about here. I mean, we might come back up to, 386 because of Nvidia. And Nvidia is not only going to bring up Nvidia in the market, but it's going to bring up Meta, it's going to bring up Microsoft, it's going to bring up Google and Amazon and all these other big tech companies and Apple. And that all those combined is just going to just take this market maybe to new highs, at least in the shorter term, maybe not all-time new highs, but we're probably looking for 388 for another new where we might be headed next in the Nasdaq side of things. But that's it for this video. Let me know what you guys think of Nvidia. If you're buying, if you're selling, what your guys' price targets might be. And please shoot me a like and a subscribe. And we'll be back tomorrow morning with another stock analysis.